long through call options. Chamath Palihapitiya is the CEO of Social Capital. He joins us now on the phone. Chamath, thank you for being here.
Hi, Scott. How are you?
I'm good, thanks. So you tweeted yesterday that you bought $115 calls in Gamestop. Can you tell me what your position is as of this very moment?
Yeah. Can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in Wall Street bets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses. But I really want to tell you, beyond the 500 grand donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk, and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. And I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of Wall Street Bets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years. And that game came undone.
Well, I mean, that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. I mean, you suggested that there's a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along. For every LP that can't get into Melvin, they get into a copycat fund that works basically like Melvin. And so when the trade goes against him, then it goes against all these people all at the same time. So the reality is there are fundamental momentum investors in the market that are organized capital, i.e. hedge funds, and disorganized, loosely affiliated capital, i.e. Wall Street bets. And I think what you're seeing is the push and pull of that, and the realization should be that if every person was forced to publish their fundamental research, it would be hard to distinguish the best version of research from Wall Street bets and the best version of research from a hedge fund. They don't have an edge. And this is what you're exposing, is that that edge is gone. And now all of a sudden, you know, retail can be on the same footing, and they don't have to be the bag holder to Wall Street.
But let me ask you this. I mean, but somebody from retail is going to eventually be the, to use your words, bag holder in this situation, are they not? And do you think it's responsible for you and some other big names who tweeted about it yesterday and to get involved yourself, knowing that you guys are considered the Pied Pipers, that people are going to follow you into these trades, and someone is ultimately going to get hurt after you and others are long gone, Chamath?
Dude, where was that message in 2008, Scott? Really? I mean, that's a joke. For example, let's look at Tesla. Who was right on Tesla? I'll tell you who was right. Every single retail investor. I was right. Elon Musk was right. Let me tell you who was wrong. Every single hedge fund. Name after name when it comes to innovation, when it comes to growth, when it comes to people trying to do fundamentally useful things in the world. If it doesn't fit into the mold that Wall Street wants, they try to organize against it. And there has been pushback after pushback after pushback in individual names, and this is yet another form of pushback. And all I'm trying to say is the mechanics of how Wall Street has worked. And again, I wish you would ask this detailed question. Why is it allowed for somebody running a hedge fund to basically claim that they are market neutral, but be levered up? They take a $10 billion fund, and their prime brokers allow them to run $100 billion of notional exposure. Who thinks that that's fair? It's not fair to the retail investor, because when that blows up and a $100 billion hole exists in a fund, which, by the way, this is exactly what happened in 2008, the government bails them out. Who is the government? All of us. So, you know, retail has been the bag holder before. Retail hasn't caused these things before. Hedge funds have caused these things before. So if you're going to talk about taking the gun away from the baby, let's make sure we figure out who the baby is.
Yeah, but do you think that you helped fan the flames and others like you, whether it's, you know, one of the Winklevi brothers tweeting about it, Elon Musk tweeting about it, that it's ultimately driving this stock up well beyond what the fundamentals say that it should be? I mean, I don't think you think, and you tell me, do you think that GameStop is worth $350 a share?
What I can tell you is that when I put that position on, $125,000 position, I used it to acquire knowledge and learning. And what I was trying to figure out is how these positions move in the modern trading era. And what I can tell you is, up until that point, the setup made no mathematical sense. How do you be short 140% of a company's shares? That wasn't retail.
Well, maybe that's a question for regulators, that maybe the way that that's allowed to happen needs to be examined. But
I'll tell you how it's allowed to happen. It's allowed to happen so that hedge funds can charge 2 and 20 to their limited partners, independent of consequences. I'll tell you another way that it's allowed to happen. Hedge funds are allowed to take their money, go to a prime broker, and all of a sudden get 10x multiplication on that money. That's the problem. You have trillions of dollars of notional being traded by these organizations. You have maybe billions of dollars being traded by retail.
I want to get back to the issue at hand, which I don't feel like you answered the question. This idea of you know, somebody's going to get hurt. You sound like you're an advocate for the little guy, so to speak, right? But yet by getting involved, why did you get involved in the first place? I mean, you said that to get information. I mean, you wanted to make money on the trade. Come on, right? You wanted to make money.
To move the needle, I need to strap on hundreds of millions of dollars. So I wanted to learn. Why did I want to learn? When I saw that article in the Wall Street Journal, I had no idea about Melvin Capital, really. I had no idea about Wall Street Bets, really. I had no idea about GameStop, except that it had been mentioned to me in a couple of tweets throughout the year. So I tweeted out after I read the article, hey, folks, tell me an interesting trade that I can put on tomorrow for a few $100K so I can learn, basically. That tweet got 10 million impressions and 13,000 comments. And when I went through there, a lot of people pointed to GameStop and pointed to Wall Street Bets. And when I went in there and started to look around, what I thought is, my God, here is a dynamic about trading, about momentum, about stocks, about short interest, about gamma squeezes. These are not things that I know a lot about, and so I put in a small position to learn. And what I learned is that people can do fundamental research, come to a point of view that's diametrically opposed to organized capital, and they can be right. And I'm allowed to be on the right side of that. You know, it's not my job to go and defend a bunch of, you know, highly compensated hedge fund managers against losses. And just the fact that for one time those folks lost, we can bellyache and cry on national television, to me is a joke.
Well, I mean, I don't think
there's a lot of kids. Hold on a second. There's a lot of kids and a lot of people on Wall Street Bets who have made money to pay off their mortgage. I read about a post yesterday of a kid that was able to pay off his entire student loans and posted it. That's amazing progress.
I'm not suggesting, and I'm not trying to come off that way, that I'm suggesting what's happened on Wall Street Bets or what this cohort of traders is doing is wrong.
It's not.
I don't think that there's much of a difference from, and I know it's been mentioned on this network already today, but the first thing I thought of in this situation was back to the Herbalife episode, where you had a fairly sizable group of well-known hedge fund managers decide to take the other side of Bill Ackman's trade. He was, of course, short. They all went long. They made a fundamental case in their own mind, and whatever worked for them to have the conviction that they did to take that trade. Part of it was undoubtedly trying to hurt the short, who was Bill Ackman at that time. Maybe some of them did it through going to an idea dinner or whatever other forum, through personal phone calls or emails, and there was a large group of people on one side of the trade. I don't think it's any different. I don't think it's any different.
You just said it's not different. You're right. Idea dinners, that concept has existed for decades on Wall Street, where people get together in closed rooms behind closed doors and usher around names of companies, and they coalesce and decide to cooperate together. The guys on Wall Street Bets just do it in the public completely transparently. In my opinion, that takes a lot more courage, because you could actually be wrong. Somebody can actually say, hey, listen, what you said made completely no sense whatsoever. And so what is the difference? In my opinion, this is the modern day instantiation of that dynamic, just writ large and at scale.
The only thing I'm concerned about is that there are inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up, because that's what they've been conditioned to think in the pandemic.
What should we do?
Because all stocks go up, apparently.
What should we do? Not allow folks. Here's what will happen if you follow your logic, then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be, retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what will happen, Scott? The inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy into hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more.